Good afternoon, everybody. Going to go over our Forex trades for today, Friday, November 18th. Pulled out 5.6 pips on two swing trades between Kiwi dollar and US dollar Japanese yen. And that was size adjusted. On a non-size adjusted basis, it was 28 pips. Left a bunch on the table. We'll go over them in a second. First, just want to talk about the latest economic news and Janet Yellen's testimony yesterday. Housing starts smashed expectations. The government told us they soared by the most since 1982. The funny part about that is over the past week or so, this is for the past month, and over the past week or so, the government also told us that U.S. mortgage applications fell by 30% and foreclosures are up 27%. So obviously something's wrong. I'd have to say the housing starts is probably incorrect. As far as Janet Yellen's testimony, some of the things that we pulled out, she expects the economy growth to continue at a moderate pace. Seriously, if this is a moderate pace, I'd hate to see a slow pace. She sees inflation hitting the 12% objective over the next couple of years. She's been telling us that for the last several years, with interest rates being so low, zero bound. They've been expecting inflation to come, but as we've talked about many times in other videos, you can't create inflation at zero bound rate. The theory is flawed. She also says rate hike is appropriate relatively soon. What else does she say here? Oh, she says rarely any conflict in pursuing dual goals. She has maximum employment and price stability are both appropriate goals for the Fed. As far as price stability, I'm not sure if she's talking about price stability in the stock market. If so, the Fed is not supposed to be, letting the stock market influence their decisions. It's supposed to be all about the economy. The stock market will follow the economy. What else did she say here? Oh, she says it's not clear why investment spending is so weak. Well, it's obvious because the economy is not growing. And she says she doesn't think the Fed has hampered business investment. It's almost like they don't get it, or they get it and they're just playing stupid. Interest rates, as you probably know, on a 10-year since the presidential election and the Trump win, last night spiked to 2.32%. They're up well over a half of 1% without the Fed doing anything. The biggest move in over 20 years in the bond market, and the biggest move ever without the Fed actually taking action on interest rates. So it's almost like the street is going to be forcing the Fed's hand. What else? Other news: Obama set a new record for regulations in 2016, 81,640 pages worth of regulations, and then they wonder why the economy isn't really moving. Also, the Treasury Department said fiscal 2017 for the government, which has started, we're on pace to increase the debt by $2.4 trillion, the biggest increase ever. Obviously, then Trump will get the blame for that, although this is all set in place already by the current administration. Let's see. Oh, one other thing I wanted to point out. When a lot of people are comparing Trump's economic plan to Reagan's economic plan, and like Reaganomics, and they're calling it Trumpnomics. One problem with that, though, is that when Reagan took office, debt to GDP in this country was only 30%. It's now at 105%, so that could be a problem. So let's go over the trades. They were swing trades. We had 20% of our normal size. We were short Kiwi dollar, US dollar from 0.70191. Lost 4.5 pips, covering it at 0.70236 for a loss of 0.9 pips. US dollar Japanese yen worked out very well. We were long from 110.207. Sold at 110.532 for 32.5 pips. Size adjusted 6.5. We were looking for a bigger move. We were looking for a move to approach the 111, which it actually did overnight. It went to 110.92. The reason why we got out, we knew Mario Draghi was going to be speaking overnight while we weren't in the office, So we didn't want to, even though that's is going to impact the euro more, it could definitely impact the yen or the U.S. dollar. So we figured let's just get out. And when we got out of U.S. Japanese yen to book the profit, we got out of the Kiwi dollar short. You know, here you have the U.S. dollar moving up aggressively against the Japanese yen, and yet the Kiwi's not moving down against the U.S. dollar. So basically saying the U.S. dollar is not moving up aggressively against the Kiwi. So you see it was stuck here in consolidation at the same time U.S. dollar Japanese yen was moving up. So we ended up taking the loss on Kiwi dollar. Obviously, was the wrong move. It did approach the figure. We were actually looking for it to move down to about 69.50. It held the figure and bounced overnight. But instead of making money, we lost there. And then, like I said, on U.S. dollar Japanese yen, we were looking for it to move close to the figure of 111. It did run up to about 92, 110.92 or so before pulling back overnight and then bouncing again this morning. So obviously, U.S. dollar is doing very well against Japanese yen. So, you know, if you're still in it, it could definitely move higher. So that's it. We're going to wrap it up. If you're still trading now, good luck. We'll be back with a video Monday, assuming we get some action Sunday night or Monday morning. Have a great weekend.